Good morning and welcome to the Perseus Mining Investor Webinar and Conference Call. All attendees are in a listen-only mode. If you would like to ask a question, please enter it into the Q&A panel within Zoom. I'll now hand over to Perseus Mining CEO and Managing Director, Jeff Quartermain. Thank you, Jeff.
Thanks very much, Nathan, and welcome to Perseus Mining's webinar to discuss our full financial year 22 results. I'm joined on the call today by my colleague Leanne de Bruin, our Chief Financial Officer, who will take us through the details of the financial report that was released this morning to the market, and she'll also be available later in the call to answer any detailed questions that you have about either the financial results or indeed our very comprehensive financial report. I'm also joined on the call by Paul Thompson, our Head of Organic Growth. Paul will be available later in the call as well, should there be any questions about the releases that we put out yesterday concerning our resources and reserves and the CMA Underground in particular. Before passing to Leanne, though, let me just say that fiscal 22 has been an excellent year for Perseus, as we've consolidated our transition to now being a highly profitable multi-mine, multi-jurisdictional company that consistently delivers on our promises. Our production during the year of 494,014 ounces of gold at an all-in site cost of $952 an ounce ranks very favourably when compared to our peers, both here in Australia and internationally. We acquired our next multi-million ounce gold development project through the acquisition of Walker Gold during the year. And as Leanne will tell you, we've just delivered a record financial performance as measured by both cash flow and earnings, placing Perseus in a strong position to continue what has become one of the better stories in the Australian gold space. But enough of this. Let me now pass over to Leanne to tell you exactly what has been achieved in fiscal 22. Leanne, please.
Thanks, Jeff. And as you can see, the operational production has delivered a record performance against Perseus's key financial metrics, which I will talk to in a little bit more depth. But in summary, Perseus for FY22 has delivered a milestone revenue of 1.1 billion Australian dollars, up at 66% on the financial year 2021. And this has delivered a profit after tax of $280 million, up 101% on last year. Operating cash flow is up 73% from last year at $523 million, positioning the group well for repayment of debt, delivery of our growth strategies, and returning to shareholders via a declaration of a final dividend of 1.64 cents per share. As mentioned earlier, the revenue is up 66% to 1.1 billion, and this has resulted in an EBITDA of 564 million, up 86%. This was a result of the higher gold prices combined with higher production due to the full year contribution from the Yaouré gold mine. The Yaouré contribution was offset by an expected reduced production at Sissingué gold mine and the underperformance at Edikan. The revenue increase translated into excellent growth in all Perseus's earnings metrics, with gross profit from operations up 75% at $350 million. A slightly deeper dive into these strong growth earnings metrics, namely profit after tax of $280 million, which is up 101%, it's worth noting the following material inclusions. Cost of sales increased by 49%, proportionately less than the 66% increase in revenue. And this was due to the increased production coming from Yaouré, which achieved an all-in site cost of $668 per ounce during the FY22 financial year. Income tax decreased by 23 million due to lower profits from Edikan. Depreciation and amortization increased by 214 million, 107% up. And this was predominantly due to the amortization of the Yaouré gold mine for a full financial year end when compared to only 3 months in FY 2021. And that was obviously due to the declaration of commercial reduction in March 21. The increase in profit after tax was achieved after recording impairments of 43.4 million as well in 2022 compared to the FY21 impairment of $6.8 million. An impairment assessment was prepared in relation to the Bagway project due to the finalisation of the related feasibility study and its inclusion in the Sissingué life of mine plan during the year. An impairment of 33 million was processed in relation to the Bagway project, with the balance of the carrying value being transferred to assets under construction as part of the Sissingué Gold Mine project moving forward. The remaining $10 million of impairment relates to write-offs in relation to unsuccessful exploration of near mine targets at Sissingué and Edikan. The earnings per share has increased up by 96% to 18.77 cents per share. Excuse me. And this is taking into account the weighted average impact of additional 125 million shares issued as part of the Orchid transaction. And our earnings per ounce was up 34% at $582 per ounce, off the 50% increase in ounces produced on last year. The growth in cash flow, similar to our strong earnings metrics, the operational performance has delivered excellent growth in Perseus cash flow metrics. Operating cash flow from operations was up to 73% at $523 million, generating operating cash flow per share of 42 cents per share and 1,058 per ounce. The growth in cash flow has positioned Perseus well to invest in growth strategies as exploration and in growth strategies such as exploration and Orca during 2022. Moving on to our balance sheet, the group ended the financial year with a strong balance sheet, including cash and bullion balances of $476 million and interest-bearing debt of $50 million US. This cash and bullion balance is after investing cash flows of 166 million, including the initial Orca acquisition and of 30 million Australian dollars and exploration of $55 million. It's worth noting that we've made a subsequent payment on of $25 million US in August 2022 on the corporate revolving facility, leaving a drawn down balance of $25 million US and an available drawdown of $125 million US. Net tangible assets are at 1.2 billion, up 28% on previous financial year, and producing a net tangible assets per share of 87 cents per share. Looking forward to financial year 2023, Perseus guidance for the 6 months to December 22 remains unchanged, with the focus remaining on the corporate objective of delivering 500,000 ounces per annum at a cash margin of not less than $400 per ounce. Perseus is guiding for the 6 months to December 22, 240 to 265,000 ounces produced at an average all-in site cost of $1,000 to 1,100 per ounce. Our continued focus at FY23 will be driven by the strong contribution from the Yaouré Gold Mine, significant reduction in capital expenditure, and balance sheet management initiatives. We will continue with fiscal discipline in what is an ever-changing fiscal and cost environment. And our dividend policy will remain focused on disciplined return to shareholders while maintaining a balanced capital structure and capacity to fund our corporate growth objectives. So that then brings me to the Perseus dividend declaration, or final dividend for FY22. Giving consideration to Perseus' strong performance in FY22, the board of Perseus has declared a final dividend of 1.64 cents per share, which is a cumulative of $22 million returned to shareholders. This is in addition to the FY22 interim dividend paid in March of 0.81 cents per share, a cumulative of 10 million Australian dollars, and an annual yield of 1.5%. The final dividend of 1.64 cents includes a bonus dividend of 0.79 cents per share, or a 0.5% yield over the 1% sustainable dividend policy. The cumulative return to shareholders since August 2021 last year is 50 million Australian dollars, which includes the capital reduction, the FY22 interim dividend, and this FY22 final dividend declaration. That brings me to the end of the presentation of our financial results. So I'll now hand back to our CEO, Jeff Quartermaine.
Well, thanks very much, Leanne. That was a very comprehensive summary. Now, before opening the floor to your questions, can I please take this opportunity to give you a bit of an update on what we've actually achieved at Perseus since the end of the financial year. I'm aware that following the release of our last quarterly report, a few of our investors raised concerns about the challenges that we reported at Edikan last quarter. Now, I'm delighted to tell you that since we restarted our mill at Edikan following the maintenance shutdown in June, everything's gone exceptionally well. And in fact, in July, Edikan recorded the best month of gold production since December 2018. And the way August is shaping up, I expect that August will be better than July. By around the middle of August, Edikan had actually passed its total June quarter production. So the operation is very well placed to achieve, if not exceed, guidance both this quarter and in the December 22 half that Leanne just mentioned. Now, not to be outdone, Yaouré continued to outperform all of our expectations, as has Sissingué. It just keeps plugging away, beating budget month in, month out. So production-wise and in terms of all inside costs, we're in very good shape, having started the quarter very strongly. And we're looking forward to reporting another excellent quarter in October, inshallah, as they say in our new home in Sudan. On the organic growth side of things, the CMA Underground is shaping up very well. Now, we released details of an initial ore reserve for CMA Underground yesterday. I should stress that these results relate only to the first 200 metres down dip. We have a bit of infill drilling to be done to extend the reserve, but from step-out holes that we have drilled, we've confirmed that the continuity of the CMA structure for at least about a kilometre down dip, and have noted that mineralisation also continues. So that's pretty exciting. Our deep drilling program at CMA, which is investigating what lies at depth beneath the structure, is in its infancy, but the first couple of holes that we've completed have returned some really interesting results. And you'll certainly be hearing more of this before we're done. In terms of our next development project in Sudan, this is also looking very good, where we've been doing a lot of preparatory work before striking out on the ground. We're ready to sign a drilling contract with a very highly reputable drilling company with significant global experience, including across Africa, and they should be mobilising to site within weeks. Their job will be to perform an infill drilling program aimed at materially increasing the mineral resource and ore reserve, and also doing sterilisation drilling ahead of construction of mine infrastructure. We've been working very closely with the Sudanese government to put in place all of the structures and mechanisms needed to cost efficiently import equipment necessary to start preparing the camp and infrastructure ahead of an influx of drillers and later on construction workers. We couldn't be more pleased with the level of support that we're receiving in Sudan from the very highest levels of government, and we're very, very excited about what lies ahead of us on that project. So not only have the financial results for fiscal 22 that Leanne's described been excellent, but we're very pleased to say that the strong performance that delivered those results is continuing into the new year. And our shareholders can certainly look forward to the continuing strong results in the periods ahead. But thank you very much indeed for your attention today. This brings our presentation to a close. And now Leanne, Paul and I are happy to take any questions that you may have in relation to either these results or any other aspect of Perseus's business. Thank you very much.
Just a reminder, if you'd like to ask a question, please enter it into the Q&A panel within Zoom. Your first question comes from Reg Spencer at Canaccord. You say, congratulations on a good year. My question relates to the Yaouré CMA Underground. He notes in yesterday's announcement included a maiden reserve for the underground. Can you help us understand what development timelines and production scheduling might look like?
Look, we have a good deal of work to be done. We would like to think that we would be bringing this into the mine plan around fiscal 24. There is some work to be done yet, and particularly in regards regulatory approvals, etc. But certainly, we think that's eminently achievable, and we'll be, issuing a comprehensive life of mine plan that includes that underground work as soon as it's available.
Thank you. Your next question comes from Patrick Collier at Credit Suisse. He's asked, could you please elaborate on your thinking around the FY23 balance sheet initiatives mentioned in the presentation?
Well, look, in terms of FY23, we've paid down subsequent to year end, I think 25 million, so we're down to 25. With an eye to the future, both in terms of development of the Sudanese project and various other initiatives, we may look at upsizing our corporate debt facility, which I think starts to step down at the end of this calendar year. And so that's something that we'll be working on going forward. That will give us the capacity to spend money on growth, et cetera. But that'll be the main initiative at this point, I think. I mean, as Leanne made the point, fiscal discipline is a key part of what we do. So we won't be getting carried away in any of these things. But I think that we would like to have a level of leverage in the business as we go forward.
Thank you. There are no further questions at this time, so I'll now hand back to Jeff for closing remarks.
Okay, well, thanks, Nathan, and thank you very much, listeners, for your attendance to the call this morning. As I said, it's been a very good year for Perseus, and we are looking forward to delivering more of these excellent results in future periods and confirming our position as one of the better gold stories in the Australian market. So thanks very much.